Let's say I already took out some of my investment. When is the best time to put money in next year? Do you think it will go down to its bottom by February of next year, March of next year, or later in 2022?
Yeah. So basically, the question is, do I think that let's say it hits an all-time high in December, will it go back down to the bottom 2 or 3 months later? The answer is really no. Really, because markets don't move that quickly, and Bitcoin moves pretty fast, but it doesn't move that fast. And traditionally, what you see is the top of the market. Really, the Bitcoin top was December 11th of 2017, I believe, somewhere early mid December of 2017. The bottom of the market was February of 2019. So it was a year and 3 months. And you kind of see that pattern of it is it really takes a long time to get back down, just like it takes a long time to get up there, right? And that's really good because that helps with the health of the market. It shows that there's stability in the market. We don't care that it goes up or that it goes down. We just want to see some pattern. We want to see some consistency. And so if it does go up to an all-time high in December or January of next year, you really probably want to sit on it. And this is what's really hard for investors to think about is you're asking me to sit on cash really and do nothing. Well, we can do a couple of things, right? We can take that money, we can put it in a high yield type savings account, like I've made videos on Nexo. So we're really gonna take my Bitcoin and I could make 6% interest in Bitcoin, right? So if I just wanted to hold the Bitcoin and make money on my Bitcoin, you could do that. You could take the cash that you have and you could put it in a high yield savings account. Maybe it makes 6, 8, or I think I'm making 10% on my cash right now in Nexo. And then I also get like a bonus of 2% in their Nexo coin just for free. But so that's really kind of a way to grow my money and really just wait for the bottom of the market. The patience is really the key here, right? You can kind of accumulate it on the way down. So like, let's say Bitcoin goes to 200 grand. Well, if it gets down to $100,000, I'll probably buy some. And if it drops under $100,000 at $90,000, I'll buy some, 80,000. But whenever I think the bottom is, that's when most of my money will go in, or whenever I see a pretty strong reversal that we're going back up. That's when I'll be like, all right, the risk is low now. Let's go ahead and jump back in. But you got to be patient. And patience is really where all the money is made. So many people are so focused, or too focused, in my opinion, on you have to keep money moving, because in a debt-based economy like America has, really they're printing money. And unless that money is moving, it's like energy. Unless that money is moving, it's not really doing anything, it's dying. And so I have to always keep my money moving. Well, with crypto, it's sound money principles. There's a fixed supply. Its value is derived from how many there are and the rate at which we can acquire those. And so I don't have to worry about keeping it moving. I could do nothing and I'm still going to profit, right? Or if I'm not going to profit because the crypto is going up in value, I'm profiting in the opportunity cost, meaning that I'm waiting for the price to come down, because statistically with high probability, the price will come down to a lower level, right? 20%, 30% at a minimum, but probably 50%, maybe even more. And that's really kind of like, okay, great. Now I have more cash to buy the same asset. I get more of the asset now, which then in the next market cycle will do better. And I just rinse and repeat over and over again. So you kind of got to look at it through the standpoint of, if you're not a day trader, right? And so because you're not a day trader, you don't want to get in and out. But if you looked at it through the lens of you're going to make 2 trades every market cycle, right? You're going to try to sell the top, right? Or pretty close to it. And really what we do is we kind of scale out of it, right? Let's say I'm going to sell 10% and then 20% and then 30%, then 40% or whatever. And kind of that's really getting me where I want to go. And that's getting me out of those positions. And then I'm just going to wait. So that's your one trade, is getting out, right? Now I've sold it. And now I'm just going to wait. And then I'll buy it when it gets closer to the bottom, or I'll start to accumulate it on the way down, so that really no matter where the bottom is, I've kind of been buying it on the way down. That's what's important. We know it's going to go back up and test higher levels. So it kind of allows me to double dip in that way. So first trade is exiting, second trade a year later might be getting back in, and then you just wait again. You have to wait a couple of more years. People always forget that I bought a lot of Bitcoin in February and March of 2019, and I've been literally waiting for well over 2 years, just waiting to be able to sell it. But the patience is where all the money is made. So if I bought Bitcoin around 4,000 and it goes up to 100,000 or 200,000, obviously I made money. And if I can sell it around 200,000 or whatever the number I think that it is, and it goes down to under $100,000, well, now I obviously have way more Bitcoin, right? And then I just rinse and repeat that cycle. It's not, you really don't have to try to nail down learning technical analysis and trading and all this other stuff. Like, just look at the fundamentals of the asset class and say, all right, I get it. There's a market cycle in here. And especially really after this market cycle, there will be more data points to really validate these patterns and these theories to solidify that I can lower my risk just by sitting back and relaxing and let the money do the work.